Hey guys and gals, this is Blake Morrow. You are listening to Phase 2.0. How's everybody doing today? I was just tweeting really quick, so let me grab the screen. Let me make sure everybody in the chat room knows that we're starting Phase 2.0 starting. You there? Okay. Let me go to the dashboard here and let's go over to what, just making sure everybody's here. Okay. Renelio says, fine, Blake. Okay, you can hear me. Good, good, good. All right. Okay, I think we're ready to go. Let me get the bias chart. Got it. Okay, so let's talk a little bit about this, and let's just talk about my last tweet, and actually I'm going to talk about a lot of these currencies because the dollar's obviously making a move right now. So we were discussing how the Aussie is, I tweeted how the Aussie is just not holding up well, considering where stocks are. Yes, the RBA did meet. Yes, they added quantitative easing. I get all that. I can only say so much in a tweet, and to be honest, tweets to me are very cryptic. I can put out a message, but you really don't know you don't know what's behind that message. I get to tell you guys what's behind the message. And, if you're in the chat rooms, you can, go, hey, Blake, what did you mean by that last tweet? I know the RBA met. I know that they added liquidity, but it doesn't matter. It doesn't change the fact that the Aussie dollar is a risk on type of trade. It's getting clobbered, or not getting clobbered. It's holding up. It's not going up as stocks go higher. Gold's getting clobbered, and the dollar and gold have a very strong relationship inversely. So if the dollar really starts to rally because gold is coming down or risk aversion starts, the Aussie is going to get absolutely smashed. And that's what I'm telling you guys right now. So, and let's just understand where we held. This is the breakdown point, right? This is the breakdown point. We held the 38% retracement. You can see this little, I did put this in the morning analysis with Aussie. After that move lower, it's the 38% retracement. We're holding below 76.60. As long as we are below 76.60, the risk is lower, in my opinion. Okay. I know, and I was trying to explain I was trying to explain on the Face webinar today. I mean, it was frustrating last night. I was out on the other side of town for like 2 hours, and I would short the Aussie. I shorted like twice. Shorted it like 76.40. I shorted it 76 like 35 at one point, and I covered it like, the first one at like 33, and then the second one I covered at 29. I mean, I only made like 4 or 5 pips on each trade, but it's like, man, this stupid thing, what the hell is it doing up here? And of course, it rolls over in European trade, but man, it's the reason why it's so frustrating, and the reason why it's not going up it's not going down is because stocks are higher. Speaking of which, let's go ahead and mark up this resistance, 38.54. Oh, whoops, I still have to 854, and support is going to be down at 37.80. Let's watch 38.15 too. 37.80, 38.15. This is very granular intraday, and oops, that's not what I wanted. Cut. There we go. My bad. Okay, so that's very granular intraday analysis. I'm not key support is down at 3,700. We're not going down to 3,700 today. We're not. I mean, it's just not. I mean, there's 90% probability we're not going down there. Hell, you never know. You got that 10% chance that we just get a 3% decline intraday. Well, based on what we've been seeing, I guess it is possible. I don't foresee us dropping 4% today out of the blue for no reason, unless it's you know, news related. Support. We have to pay attention to support in the Aussie at 76, 75, 67. Now, also keep in mind that this is a 38% retracement of, when you're looking at 38%, you're like, where's that come from? That's actually the low, the most recent low back in October to the high. So I ultimately think we're going to 75 cents. Well, I actually ultimately think we're going a lot lower than that, but that really is more dependent on stocks, not on my forecast. But I think in this move, in intermediate, we should be seeing 75 cents coming up. But for now, we have to look at basically 75, 70. I mean, you can put 75, 67 if you want, but I'm for 75, 65. Maybe I should just write that 75, 65. Okay. Let's go over to the euro. So the euro is right now bearish. We broke down, and the problem with the euro is it's not bouncing. So I'm going to say this, while we are below 124, well, it's actually, you should look at the underside of this trend line. I just don't think we're going to see 120.40 again. Not today. I mean, 120.40. That's resistance. As long as we stay below that, we should stay bearish today. Support 1973, then 1920. I mean, I'm going to write these down just because this is a big breakdown. This isn't like a little breakdown. This is a big breakdown. So whoops, dang it, man. One point. I don't, 1.1970. Okay. I don't think we're going to go down to 119.20 today, which would be this high. But remember, it's such a big break that, hell, you never know. You know, the dollar could get carried away and the euro could get carried out on a stretcher. You know what I'm saying? It's possible. This is a big break. I mean, this is big. So as long as we continue to hold down here, it's you know, those are the risks. Cable, big rally back in sterling. But notice where we stopped. We stopped at the underside of this broken ascending wedge trend line, right? So there's your ascending wedge, basically. There's the trend line. So while we're below 137, now I know there was those of you in the chat room that were selling sterling, you know, earlier, and I get it. You know, you're a trader, so the natural instinct is to go counter trend, or you know, counter a rally. You want to fade, you know, these big moves. But remember, everybody's positioned for negative rates, for the possible introduction of negative rates, and that didn't come, so that's why it's squeezed. I hate fading central bank days, because if there's one thing that can move the market, the currency market, for good in a direction, it's a central bank, you know, move, whether it's you know, whether it's a you know, an actual interest rate decision or a shift in policy. Today, you know, the market was expecting a shift in policy and they didn't get it, so that's why it's up here. That would have been different if the Bank of England said, you know, negative interest rates are now being discussed, and then everybody's like, oh crap, that's what's happening. The sterling would have gone from 135.70. We would be trading probably closer to 134 right now. And I don't think we would have stopped either. So this just, in my opinion, this bounce up probably just paused or stalled the inevitable of eventually making it back to this trend line down here. Question is, do we hit new highs first? Well, that probably is more dependent on the euro, to see if the euro, you know, goes to you know, back above 120 or not, which I don't think is going to happen. So for now, just be careful. Like I said, on central bank days, I get really central bank decision days, I'm very hesitant about fading a move, you know, unless you start thinking about how poor positioning is. Anyway, support. I don't think the sterling downside is going to be too great today. So I think that you might find support maybe 136.50, maybe 136.30, the 50% retracement. I'll write 36.30, but it's not great support. I just think it is 30. Okay. And for some reason we get down there because the euro's imploding. Just, you know, I think you might find some support down here. Just, you know, if you happen to be short, just be looking at that. We talked about the Aussie, the Kiwi. We're in this bearish wedge. And you guys might be asking, really quick. So do you see this black moving average? Do you know what moving average that is? It's the 48 EMA. And if you don't know the story behind this moving average, I'm going to tell you really quick. First of all, there was a trader in our chat room who unfortunately passed away. He was with us for, well, I mean, he was in my old chat rooms back when we were at MB Trading, you know, so we're talking 7, 8, 6 years ago. His name's Captain Ron. It was Ron out of Florida. He would always you know, sail. He was a sailor, and then he'd go to the, you know, Soggy Bottom bar. Hold on, let me see. Soggy Bottom. Here in the Soggy Bottom bar in the British Virgin Islands, right? So he's like, oh, this is my favorite place in the world, and you know, here's a cam, and then he would, you know, sometimes like, you know, say, hey, I'm heading over to the Soggy Dollar bar, and then he, you know, boat over there. Anyway, great guy. And he was in our chat room for, you know, many years. Passed away. I believe it was a heart attack last year. Anyway, you know, I kept up with his wife and his son, and he lost one of his younger son too. So he lost him a couple years before, or just like a few months before. Anyway, it's very sad. But he was a great guy, and he was actually a really good trader, and many of us remember him in the chat room. You know,
we do.
You talk, yeah, indeed. Yeah. Steve remembers him, right? So somebody was asking about the EMAs or something, and I think Nitish said, "Hey, you know, you should go watch the YouTube video from the interview that we did with Captain Ron." And I said, oh man, I need to go search for that. And Simon pulled it up, and it just so happened I saved it on my playlist. So when I was walking around yesterday at my son's soccer match, he's like, you know, I used the 48 EMA because Bloomberg did a study, a quant study, that the 48 EMA is the most, you know, respected EMA, something like that. And I'm like, you know, I should really keep it on my screen. And so you'll notice it's in black right now. And so the philosophy is basically this, you know, depending on how you're trading, you know, if you're trading intraday and you're a scalper, right? You know, using maybe a 15-minute chart and saying, well, it's below the 15-minute 48 EMA, just stay on the short side. If it gets above it, then you don't want to be looking for shorts anymore. You know, since I'm more of a swing trader, I kind of look at the 4-hour, you know, EMAs more. And my thought process is, while we're below or above, I just want to be looking for longs or shorts, you know, and that's why I'm going to keep it up there. And thanks, Simon, for posting that back in the chat room. And if you guys don't know or haven't watched, here, I'm going to put it up here. I'll put it in the chat box. If you guys haven't watched this, to all panelists and attendees, there you go. There's the YouTube video. You guys should watch the interview with old Captain Ron. That was from 2018, maybe 2019. It's such a great interview. God, I miss that guy. I made an offer to his wife and son, if they ever came out to Phoenix to please give me a call and they can come stay with us. And we emailed a couple of times, maybe about I want to say month or two after he'd passed. And I helped her with she's like, I don't know how to access his trading accounts, and it's with this brokerage firm. I'm like, okay, well, here's the numbers, and call them and tell them this and that. I helped her with that. And then, I haven't heard from her since. And I mean, I'm sure I didn't expect to, but anyway, let's move on. I'm sure you guys got other things to do rather than listen to the story. So the Kiwi, bearish wedge still forming. Resistance is at 72.20. Support today is going to be, I think we have to look at 71.50 again. I know I wrote this down yesterday. So 71 is key. Shoot. 71.50. I'm pretty sure I wrote that down yesterday. 72.25 is resistance. We're still in a range. Dollar Canadian. I know we made a point of talking about this during the FACE webinar. This is holding up really freaking well. Look at where crude's at. Look at where stocks are at. You got to ask yourself, why is the dollar Canadian right now just holding up so well? I mean, my answer is I'm not too sure, but I wouldn't want to be short right now. Because if crude comes off or risk comes off, we are going to break out. So I'm going to look at resistance as being 128.50, then 128.80, 28.50, 128.80. That's key, actually, that 128.80. We are basically in a range right now, but we are threatening to go bullish here. And while we're above the 48 EMA, I'm just kidding. But no, I'm not really. I think while we're above this triangle support, which comes in at 127.70, you have to keep looking on the long side, right? Dollar Swiss. I pulled some dollar Swiss of my longs off this morning because we'd reached a 50% retracement. The 4-hour moving averages or RSI is pretty overbought. So I want to be a little careful here. But next resistance comes in at 90.94, which would complete the inverted head and shoulder pattern, right? It is bullish right now. And while we're above, I mean, even right now, while we're above 90 cents, you got to look at 90 cents as being buy the dip opportunities, I think. US dollar, Norwegian krona. Okay, so this is same as the dollar Canadian. We break above 866, then there's 870, and then after that, Stelios told you he covered his shorts. I mean, I think that makes sense. 867, 870, and then that's going to be key because we break through 870. I'm sorry, it's at 872. That spike high. That spike high happened when the S&P dropped to 3,700, but we break through that 872, and then you're talking it's opening the door towards 9, and that's not a very far move. I mean, if you look at currencies, I mean that's a 5% move. 5% for a currency market in a week, it could be done. Look how far the US dollar Norwegian krone would have to go. It'd have to go up 40% to get to those spike highs. So we have a lot of ground to make up if we see a recovery. So that's the thing. It's been a great short, but trends don't stay that way forever. And if it's going to resume its downtrend, it probably will at some point, but it may be closer to like $9 or so. While we're above, I think it's 855. This is because you can see this hourly, like little false breakdown yesterday. barely, but that's horizontal support. That comes in at 8. I'm sorry, it's 858. So while we're above 858, I think you got to be really careful being on the short side of that. Okay, let's see. Stocks did just open. NASDAQ's coming off a little bit here. Dollar Mexican peso, I'm going to try to hurry things up. Dollar Mexican peso is near its high. This is another one that's not backing away. Yes, we might have a head and shoulder pattern here. Sure, I get it. I hear what you're saying. But what I'm saying is if we break this downtrend line, this descending trend line at 2043, I think it's going to make a move for 2090 or whatever it is. So 2043, that'll be resistance today. I do think that we're building a huge base here, and I do think we're going into the mid 20s, just mid, like, 21, 22, 23, back up this direction. I mean, it's just everything looks like it's a base building. We're building like these big bases, and it's what the eventual outcome is going to be is a dollar recovery. You just don't know if it's today or if it's next week, which probably is not today, but I don't know. I mean, the euro's already breaking down here. So dollar Mexican peso, while we're above 2025, I think you got to remain bullish today. And you guys know I'm more bullish in the dollar Mexican peso just because of the way that we've come out of descending wedges. This descending wedge, I'm just bullish, but I get, actually, you know what? I'm going to take that back. I'm going to take that back until we get above this descending trend line, but I do think it's coming. All right. Dollar yen. Man, stupid dollar yen. I really have I've missed this whole thing because I just don't know how to read the damn thing, but we are at the 38% retracement. That's something we should note. 38% retracement right now, 105.42. Does that mean you should run out and short the dollar yen? No, but I would sure be a little cautious here. I think it's bullish while we're above that descending trend line. So that I can get on board with. And I think the dips back to 104.80 should be well supported. Dollar index. Inverted head and shoulder pattern, 90.85, the resistance, big resistance comes in at, that's a 50% retracement. That is at 91.75. I'm going to write down 91.80. So 91.80, it is bullish. We're in this inverted head and shoulder pattern, 90.80. And this is going to be really key resistance today. So I would actually, what I'm going to do, because I think this is kind of important, I'm going to put an alarm here at this price, because if we get there, a lot of times when you have a chart pattern, right? You have like, let's say it's an inverted head and shoulder pattern like this is, I don't look for the completed target. I try to undershoot, because when you have everybody looking at the same chart, everybody's looking at this inverted head and shoulder pattern, people are going to start putting their take profits at that exact price or close to it. So I'm going to undercut all those people. So that means when we get close to a target being reached, especially on something that is widely as watched as the dollar index and everybody's looking at the same pattern, and we already know that like in this case, this is previous support, and I'm just talking about inverted head and shoulder pattern, this inverted head and shoulder pattern. But what I'm concerned with right now is that this previous support is really strong resistance. That's a major breakdown point. There's going to be a lot of people selling there, so I want to be notified as we approach that 91.80. Because if we're really stalling, I do want to, take some of the profits off of, any dollar longs that I have going right now. So which is, I still have some dollar Canadian. I still have some, Aussie shorts, dollar Swiss long. I'd still carry, those dollar positions, and I want to pare back some, if we start really stalling up here. Okay, let me continue on. Last, gold getting smashed. Gold, and this is giving the dollar the tailwind, and gold's breaking down. I mean, we're below 1800. So, think about, and I know I've mentioned this multiple times over the last several days, this entire week, I've mentioned this, and I'm going to say it again. And I said it yesterday. I'm 100% positive I said it yesterday, and I'm pretty sure I said it the day before and the day before. Silver, inverted head and shoulder pattern. Now we're giving it up. And if it's giving it up, a lot of people bought gold with the inverted head and shoulder pattern that was setting up, right? Shoulder, head, shoulder. A lot of people got long here. And I'm like, man, if they're not getting paid, be careful, because it's going to come down soon as silver comes down. I think I even wrote it in the, I think I even wrote it yesterday too. Gold. Gold has reversed with silver. Oh, shoot. What's happening? Oh, Euro's getting smashed right now. So anyway, yeah, and I said the risk of break below 1800 level would be bearish. We did close below the 200 DMA. That was yesterday. So yeah, I mean, look, next really key support is this 1760, and and gold bulls do not want to see that break. So 1760, I think it's bearish now. And resistance is going to be back at 1800, because that's the breakdown point, right? Okay, so there's your bias chart. It's finished. I'm sorry, guys, to get into story time. I didn't want to take up all your time, Steve and Stelios, but Ahmad wanted to get our thoughts on the Aussie yen. I'll give you my thoughts really quick, and then I'll let Steve take over. So we're in this descending channel. I think while you're below this dotted line here, which comes in at 80.75, I wouldn't want to be long, especially with the way the Aussie's acting, all over the place. Anyway, those are my thoughts. Steve, Stelios, sorry guys.
Sorry, what? I was asleep. Hello.
Come on. I'm not that boring. I mean, I'm boring.
No, it's okay. You're not Steve.
All right,
true.
guys. Well,
Very true.
I'm going to let you guys take over, and you guys have a great day. And I want to say again, I hope you guys are enjoying the bias chart analysis exclusive for our ForexAnalytix community. And I want to say thank you guys all for supporting us. We can't do this without you. So each and every one of you are very important to myself and the rest of the team. So thank you. All right, Steve, Stel, you guys, it's all yours.
Thank you, Blake.
All right,
thank you, mate.
One thing to mention from phase one, we did get jobless claims out of the US slightly better than expected. But non-farm productivity worse than expected, labor cost better than expected, blah, blah, blah. Who cares? So, we got that out of the way. I guess everybody's waiting for non-farm payrolls if they will do something tomorrow. But I think the week is done in terms of data.
Yep.
What do we have to look at? We have the usual platinum, palladium, and euro yen, which I think is dropping today, right? Yeah.
Yeah, we don't have a lot of time because Mondays and Thursdays we have the Spanish
we have
webinar.
Yes. So we have what, 10 minutes or something?
Yes. So
Okay.
we're going to go over these 2 days. We have to be a little bit more brief. Silver breaking through this short support, so targets the channel once again. Gold, quite a big move lower, but if you remember, you should have expected that. I talked many times about how this looks like a perfect pennant, so I'm not surprised, and on the other hand, really doesn't at all affect my bias. I'm going to be more than happy to see gold depreciate lower towards this channel trendline support. I think it's going to be an excellent buying opportunity. I think gold is headed much, much higher, and it's going to be good if gold and silver both give us an opportunity to buy them at better prices. Platinum, for the time being, holding this formation. So far, no real damage done here, so it's holding up better. Copper is also holding up quite nicely. Some kind of horizontal consolidation, might be like a head and shoulders formation, but the neckline was not what we drew, so hasn't really broken down yet. And this is something I'm paying close attention to. We had a question about Euro Yen, and I think that Euro Yen is rather interesting, but nothing to do with it in the short term, because I see a consolidation. Now, of course, given the prior moves higher, there is a very decent chance that this consolidation is going to be resolved to the upside. But there is no risk reward to either buy it or sell it where we exactly are at the moment, right? Euro plunging lower, it is to be expected. I said this was a triangle and it should produce one more leg to the downside. On the other hand, Euro Yen is holding much better for the obvious reason that USD Yen is propelling higher, which is to be expected because USD Yen has broken through both of these formations, and the next upside target of interest is at 106.50. So keep that in mind. And as long as USD Yen is going to be moving to the upside, you're going to be seeing the Yen pairs not following what the USD pairs are doing, right? Let me go through some of the rest of your questions. Palladium, for our friend that is asking, is still consolidating. I think it has room for more downside, right, within this larger consolidation. But eventually, I think it's going to move higher as well. But it might take a long more time. So I think you need to be very, very patient about it. Let me see if we have any more questions. This is your chance, guys and girls. Just throw in anything you need to ask before we have to close the webinar. Could you have a look at oil? Yes, absolutely. Crude oil, I think it's... There it is. Crude oil, I think it's at its last leg higher. You should be careful. I had this area in mind, 57.50. I talked days ago about the divergence we're seeing between the crude oil correlated instruments and crude oil. So I would be very, very careful. It still is very bullish. It still produces higher lows. There's no question about it. I still think that within the year we're going to see higher prices in crude oil, but I don't think you should be buying it anymore. I think that you should wait for a proper corrective move lower before you buy again. That doesn't mean that it's going to turn immediately lower. It just means that chasing it up here is, in my opinion, extremely dangerous and has a very, very big chance of giving you a lot of pain. So I'm not looking to short crude oil, but I am looking for crude oil to move lower. And I will be more inclined to buy that correction than to try to just call a top and trade it counter trend. I did cover Euro Yen just like literally 2 minutes ago. Pound Aussie, where is it? There it is. So Pound Aussie, look at this. Held the channel trend line support yesterday perfectly, right? So still no breakdown here. And I remind you what I said yesterday, the rest of the pairs, meaning Euro Aussie, Euro Kiwi, Pound Kiwi, have already broken down. It has not from its long-term trend line support, but this rebound looks corrective to me. But what do we actually need here for this to break down and move lower? We need some risk off. So I think until we get some risk off, we might keep seeing this, slow drift higher. But once you see risk off, you don't want to be in the long side of this. I think it's going to turn around and dump very, very fast. These cross rates have the tendency of moving extremely fast. I mean, they can easily produce a 300, 400, 500 pip move in a day. So keep that in mind. Oh, I've never checked that chart, Georgie. You missed the silver part, and then I'm going to check that chart, and then we have to close for Trufa. So silver part, I'm saying that it seems to be trying to break through this soft support, and then it opens up this channel. We break through that channel, we're looking for a deeper correction. Okay, but in any case, I'm looking for higher prices. The question is, are we going to hold this channel and just move higher from there, or are we going to have a more complex correction and then move higher? So pay attention to this channel. And now let's look at CO2 emissions. I've never actually ever checked out the chart. Somebody gave me a ticker. Doesn't seem to work here, this ticker, Georgie. Can you please find it on TradingView and just tell me? Typo. Okay, yeah, let me check it. Ooh, yeah. Listen, there is only one problem with this chart, other than it looks very bullish, which there is no question about it. The problem is that this is a triangle, and usually moves out of a triangular terminal, meaning I would expect that we're not far away from a corrective move lower. Okay. Other than that, this is a very, very, very bullish looking chart. So I wouldn't be buying it here. That was a great trade, by the way, if you were paying attention to it back then. I mean, this was a textbook bullish formation, this triangular consolidation, right? Textbook breakout trade here. But, you know, too late for that now, right? So a deeper correction might be around the corner and then higher. But it looks very, 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 very bullish. So I really wouldn't try to fade it in the long term. I mean, it looks like a healthy uptrend one way or the other. And last but not least, I'm assuming this is Litecoin, right? Yeah, it is. Bullish. Why bullish? Because this looks like a pennant to me, right? So from a technical perspective, it looks decent. Okay. Now keep one last comment here. Keep in mind, you know, corrective moves are notorious for being devious. So, you know, nobody can guarantee you that the formation is not like this, and it's actually like this. But, you know, this looks like a likely possibility. So this looks like probably we've already broken out from this pennant, and we should be moving higher. Okay. Okay. So have a wonderful day, everybody.
Thank you, Steve.
And we'll see you back tomorrow. Bye-bye.
Thanks, everybody.